This is Alan Bush with ADMIS. In the stock index futures, we did see some pressure yesterday. This after a large investment banking firm indicated that they thought that stock index futures could come under some pressure this year, possibly as much as a 10% correction. Since then, though, we have seen some recovery today with retail sales coming in stronger than expected. Also, we do feel that with all of the accommodation in the banking system, even though the Fed is likely to scale back some of their QE this year, stock index futures have enough liquidity as far as the banking system is concerned to continue their historic advance. In fact, I would not be surprised to see some new historical highs in some of the major indices within the next couple of weeks, in spite of yesterday's sharp decline. Over in the currencies, seeing the euro currency a little bit better. We did have Eurozone industrial production coming in stronger than expected. Also, we did have some pressure in the pound initially, this after UK inflation numbers coming in weaker than expected. But since then, there has been what appeared to be commercial buying coming in to take the pound higher. Longer term, we still feel that the pound is likely to be one of the best performers on the upside. The yen under some pressure after Japan's current account deficit coming in at a record number. Also, we have a lot of pressure in the Australian dollar. Some talk that with the Australian dollar trading yesterday over 90 cents, that there's the possibility that the Reserve Bank of Australia could come in with some negative comments. In the recent past, they have attempted to push the value of the Aussie dollar lower. So a lot of pressure today in the Australian dollar. Longer term, it looks like there will be some additional weakness in that currency as well. And in the interest rate markets, with retail sales coming in stronger, that putting some pressure on futures, even though we did see some recent gains over the last few days. Also, with yesterday's gains, we did get close to some very major resistance areas in the 30-year bond. So over the near term, I would look for treasuries to drift lower, at least at the long end of the curve. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.